Well, David, I operate in the Bitcoin world. And one thing that's been interesting to see is normally Bitcoin has been correlated to liquidity. And this is one of the, I don't know, less than 20% of times where it has kind of uncoupled from liquidity. And so I know you don't follow it closely, but maybe what's your take on why Bitcoin has underperformed just like gold?
Yeah, so I'm not as much as I say there's enough liquidity to drive the markets. I do obviously we shrunk the balance sheet here from 9 trillion down to 6.5 or 6.4 now or 6.7 I think. So liquidity is it's not at least traditional liquidity of printing money is not really there. They've had places where they had to pump liquidity into the banking system because they used up their repo facility pretty much and had played that game for few years. Um, but I'm not so sure that we have this massive liquidity out there that some people want to look at rates and things and say liquidity's you know expanding, et cetera. I'm not sure we have a lot. So I don't know that Bitcoin's really doing doing something contrary to what liquidity is. But I will say, because I say this about the other markets as well, a lot of I think the weakness in Bitcoin. I did dip my toe in,
Oh,
and with
wow.
no, you won't like this. With an opinion on Bitcoin
Oh,
at over 100,000.
oh,
Um,
okay.
be, but it was strictly technical.
Okay.
I put
You
pretty
thought it
much
was frothy, like,
disclosure out there. I'm saying,
okay.
what I read in the charts, this thing could go to 75,000,
Mm.
and then I've since said next step maybe 50,000. So I'm bearish Bitcoin, but I'm the first one to tell you I don't follow it. So people should take that with a grain of salt. It's strictly a technical read, but I do think what I see in other markets is probably true there too, which is momentum begets momentum. That a lot of the reaction in Bitcoin is more to do with the negative tape than it is fundamentals. That it's just like silver. There was so many people, you probably know this better than anybody, that jumped in between 100 and 120 because it was going up, and they saw a sure thing, and they're the ones that are underwater and bailing out,
Yeah.
and then you have the leverage players like Sailor and et cetera that are going to get stuck because of that. So I think it's as is true in so many markets is when you get into these bear markets, momentum begets momentum, and it may not be as much fundamental as it is just people going with the tape.
Yeah, no, I think a lot of people are bearish, at least in the near term. Not expecting any new all-time highs on Bitcoin in the next 6 months or so. But I think it's the ultimate contrarian asset. So for someone like you, I'm gonna have to send you my book. Bitcoin is for everyone.
As you know, yeah, send me your book. But as you know from probably the first time we talked,
Yeah.
or at least when you really got involved in Bitcoin, I always said I want to see it get through the bust. Yeah, I want to see how it holds up in the bust. After that, I'll be able to know whether it's something that's as real as everybody says it is or not.
Well, before we start to wrap up, can you just let people know what signs to look for? You've covered it on my show a little bit before, but maybe there are some new listeners or new viewers for those end stages, right? When there is this temptation, well, everyone's piling in, I don't want to miss out. What to watch for. And then once we enter this phase where, again, all good things come to an end, the music has to stop at some point, we are going to see probably a massive correction. It might not be this year. It might be next year or the year after. I think we're going to head into some tumultuous elections as well. But how should people prepare for when the down cycle comes?
Yeah, two things. One, the thing I get asked this a lot is what to look for to determine a time where you feel you're getting close to the top. And for me, so much of it is sentiment. When you see an all-in mentality, like I said, right now you
Greed,
still have,
all
yeah,
the greed,
greed,
exuberant.
yeah, and you can't go by, like CNN has their fear greed index. That flips around. It's more of a trader's index. One month it's up almost 100% greed, and then 2 months later it's back down to a lot of fear. So but it's the bigger picture investor sentiment where it truly is everybody's all in and telling you you have years to run. That AI is not close to the end, or that you're hearing it in the semis. For example, now the semis, people questioning Micron being up on stilts like this, but the analysts will push back and say, yeah, but they're going to be coining money because there's not capacity to meet the demand, and it's going to take a couple of years to get there. That's the signs in from a market standpoint, when the market is telling you, oh, you got a couple of years to run because of this and that and the other thing. When everybody's all in bullish, those that are, it's not that the institutions aren't in there, but they're not raving bulls. When they're raving bulls and giving the story as to why, well, we're not near a top, that should perk your ears up and make you nervous. Doesn't mean you're right at the top, but it means you're beginning to see the shift that tells you that this thing could roll over at any time. So sentiment is really big in that, because the fundamentals will follow. Markets lead fundamentals. So if you wait for the fundamentals to tell you things are turning negative, you're too late. So that's that. Your real question, though, is what to do. And I obviously can't give advice, but I believe that, if we have a global bust and it's accompanied by a bear that's the biggest since the 29 crash, so something 70, 80%, I've been saying 80%, that's to have an 80% down market, meaning the S&P down 80%, people go, well, what would be down the most in that? And I go, if your market's down 80%, everything's down a lot. So it's not so much choosing what to, get out of. It's going to be everything down a lot, or most everything. So it really does. I've talked about how from the mid 80s, we've been in this mantra of it's time in the market, not timing the market. Mm-hmm. And that's been the financial mantra for a long time. And that's proven genius. I mean, if people listen to their financial advisors and did that and just kept contributing to their S&P index or their 401k and putting in the S&P index or whatever, you look brilliant, because you outperform most institutional investors, most professionals, and it's easy to get caught in that and say they were right for 40 years. I'm going with that now. But if you think about the scenario I'm portraying, if we go down 80% from here, it's very hard to climb out of that and get back to even, never mind make money from there. I actually think the highs in the stock market, probably this year, certainly this cycle, will not be seen again in the next cycle and maybe for decades to come. That means buy and hold. You're going to go down with the market. You're going to, give up all the gains you've had for decades. And then the way percentages work, to come out of a down 80%, you can go up. You could have a great cyclical bull market coming out of the bottom, go up 3 or 4 fold in the market, and still be far below the highs of this year. So it really does behoove people to maybe understand their, rules are made to be broken. Sometimes rules that work great for even decades don't work at a certain point, and I think that's where we're at. On the other hand, everybody's so worried about, I think anyway, looking at the big picture, on the institutional side and a little bit on the retail side, everybody's so worried about a top being right around the corner and that we're almost at the top, and they're really much more focused on losing money. That's one reason why I think we have a ways to run here, even if it's not time-wise. I think people have to understand, if they jump out now and say, I'm just not smart enough to call a top, boy, I hear what he's saying, I'm getting out now, you run the risk that the market could be up 30 to 40% in the next 6 months. And as you approach that high, you're drawn back in by the narrative that says, oh, this is not even close to a top. And then you defeated your own purpose. You got out, you did the right thing, but then you felt compelled to have to get back in because you missed so much. Right. So just people need to understand, if we're where I think we are in the market and in a parabolic, we can see what would normally take 2 or 3 years to get in terms of returns, mm-hmm. in less than 6 months. maybe less than 3 months, who knows. So don't be so quick to react to the big picture yet. Yeah, obviously, I may be wrong, and it could go down, and that would be bad advice, I guess. But I just want people to understand the dynamic at the end like this. It gets tricky. Don't be greedy, but don't be too anxious to